Hello everyone, welcome back to the channel. Today we're diving into another episode of the Road to 100k series. In this video, I'm giving you a complete breakdown of where all my invested money stands right now. Here is what we're covering today: how much I currently have invested, my current contributions, latest dividend earnings, overall portfolio performance and market movement, and my strategy moving forward and the outlook until the next update. Alright, so starting off with the total portfolio value and how much I currently have invested. Right now, across both of my accounts, the total portfolio is sitting at $64,193.65. To give you the exact breakdown of how that's split up, my workplace 401k is currently sitting at $21,924 and my taxable brokerage account is at $42,269. Seeing both accounts combine and reach $64,000 is a great feeling. Consistency is still there and brick by brick we're getting closer to the goal. To put these current numbers into context, let's look at where we were in the last episode versus right now. Last time we checked in, the brokerage account was at $38,264. Today it's up to $42,269. The 401k was sitting at $20,431 and now it's up to $21,924. That brings our total portfolio up from $58,696 in the last episode to $64,193 today. That's a total growth of almost $5,500 or a 8.56% increase between episodes across both accounts. Okay, let's talk about contributions and how much money is actually being put to work. Every single month, I'm investing a total of $1,048 across both accounts. For my 401k, I'm contributing $408 a month, and that includes my employer match. For my taxable brokerage account, I'm consistently putting $640 a month. I always like to share these numbers because I earn $18 an hour. It proves that you don't need a six-figure salary to build real momentum towards a 100k portfolio. It really comes down to consistency, staying disciplined, and sticking to the routine month after month. Along with my contributions, let's take a look at the top 5 holding in each account to see what's doing the heavy lifting. Starting with the 401k, which is invested in the S&P 500, the top 5 positions are heavy on big tech. We got Nvidia at 7%, Apple 6%, Google 5%, Microsoft at 5%, and Amazon at 4%. Over on the brokerage side, we have a strong mix of tech, financial data, and high quality dividend growth names. Google is my largest holding, 10.50%, Microsoft comes right behind at 9%, S&P Global sits at 8%, Automatic Data Processing 7%, and the same with MasterCard to round out the top 5, 7%. These top positions gives both accounts a really solid foundation of market-leading companies that continue to push the overall portfolio forward. Now, one of the main goals with this portfolio is building a growing stream of passive income over time. This is where the dividends comes in. Since the income is not needed now, the dividends are reinvested, adding an extra lift to my contributions. Looking back at where this all started, the compound growth really speaks for itself. In 2020, the portfolio brought in $23.67. In 2021, that jumped to $90.55. 2022, we crossed the $200 mark, bringing in $208.01. In 2023, it almost doubled again to $396.29. 2024, we reached $537, and in 2025, we closed out the year at $570.03. So far in 2026 year to date, the dividend income is already sitting at $410.52. With several months still left in the year, we are well on track to set another all-time high for annual passive income. Let's talk about the overall performance and how the portfolio is stacking up against the broader market. Right now, my 401k is up 11.92% and my brokerage account is up 9.15%. For context, let's look at the major benchmarks. The Dow is sitting at 11.50%, the S&P is at 12.64%, and the Nasdaq is leading the pack at 16.56%. As you can see, both of my accounts are lagging behind the S&P and the Nasdaq. The reality here is that we are in a heavily AI-driven market. The broader indices are being pulled up massively by huge runs in tech and AI sectors. While my 401k and brokerage account do hold some big tech positions, my overall strategy is anchored in dividend growth and high-quality compounders. In a market where tech and AI are running this hot, a dividend growth portfolio is naturally going to lag behind those specific indices. I'm completely fine with that because the goal here is long-term sustainability and growing that passive income, not just chasing whatever is currently running the hottest. To wrap things up, let's talk about my current strategy, a quick adjustment, and the outlook moving forward to the next episode. When it comes to my strategy, nothing fundamentally changes. I'm sticking to my high savings rate and continuing to allocate capital into my highest conviction stocks. Consistency and patience are what build a sustainable wealth long term. Now, for the one quick adjustment, I recently received a pay raise at work. Because my 401k contributions are percentage based, that raise automatically bump up both my personal contribution and my employer match. That extra cash flow is already accounted in the contributions mentioned in this episode. episode. Now for the outlook, looking at the bigger picture, yes, the portfolio is technically lagging behind this current AI-driven market, but I view these heavy tech surges as temporary market cycles. Long term, as high-quality dividend growth companies continue to raise payouts and compound, I believe performance will balance out. We are moving at a really solid pace. The portfolio is sitting over 64,000 and that 100K target is getting closer every single month. That's going to wrap up for today's update. And if you enjoyed this video, make sure to drop a like and subscribe to follow the journey. Thanks for watching, and I'll see you in the next one.